Hello, hello out there. Welcome to another segment. We are still looking at preparation of vouchers and their usage. Preparation of vouchers and their uses. So in this segment, the sub-contents are classification of vouchers, essential features of a valid voucher, valid payment voucher, rules guiding issuance of payment vouchers, laws of a payment voucher, payroll accounting in the public sector, custody of personnel emoluments, record cards, and action by salary section on payroll, action by internal audit units, and action by card office before we move to practice quiz. So introduction, we say a voucher is a documentary evidence. A voucher is a documentary evidence of payment or receipt of money, which is available for future reference, accounting and auditing purposes. It is the documents that serve as evidence of receipt or disbursement of government money with the adequate authority and procedures. So that is a voucher. If examiner say you should define a voucher, you just say a voucher is a documentary evidence of payment or receipt of money, which is available for future reference. So classification of vouchers, we say vouchers may be classified into four as follows. Payment vouchers, we have payment vouchers, we have received vouchers, we have adjustment vouchers, and we have journal vouchers. Journal vouchers, adjustment vouchers, received vouchers, payment vouchers. So what is a payment voucher? A payment voucher is any money to be paid by government must be supported with a payment voucher. This is to serve as evidence that payment is made for goods purchased or services rendered. Vouchers are prepared at the point where payments are to be effected. Preparation of vouchers must be done when payments are to be made for one, goods that are ordered and supplied by contractors, goods purchased directly from retailers, wholesalers, or manufacturers. Three, services rendered by government, by the public or other government, corporation, example, power holding company. Power holding company is not existing again. Then company that generates and supply electricity. So the electricity is now on private hands. So a section of a contract job properly awarded to contractors. These are where you raise payment vouchers. So essential feature of a valid payment voucher, before you can say this is a payment voucher, all these conditions must be met. All these conditions must be met. So date of the voucher must be there, which indicates its lifespan. There must be date of that voucher. There must be a classification code according to the National Chart of Account. I've taught you what National Chart of Account is. There must be classification code. There must be amount in words and figures. Amount in words and figures must correspond. And the voucher number. There must be a voucher number. So, E, there must be description of payments. F, name and address of payee, that is the beneficiary of that payment. Then supporting documents such as local purchase order, invoice, store, receipt, voucher, and contract agreements. And authorities such as the signature of the officer controlling expenditure and the type of warrant which will release the money. So signature of the cashier that will release the money, signature of the payee, then voucher certification. So all these things must be present for you to have a valid payment voucher. So for you to have a valid payment voucher, all this must be present. So take note for a payment voucher to be valid, all these variables must be there. So rules guiding issuance of payment voucher. What are the rules? According to financial regulation, a sub-accounting officer may not make payment against a voucher unless A, the voucher is certified for payment by the officer who is authorized to do so. B, the voucher is stamped, checked and passed for payment and duly signed by the checking officer stating the name of the station. C, the voucher is stamped, entered in the vote book, and keeping of the vote book duly signed. So those are the rules guiding issuance of payment. Before you raise a payment voucher, you must be guided by all these rules. Then loss of a payment voucher. When payment voucher is lost, what happened? Where a payment voucher is reported lost, the following procedure should be followed. A, prompt investigation should be carried out. B, it should be established whether payment has been made on it or not, so that you will not make a double payment. C, it should be ascertained whether or not the cash drawn is still on hand. That is, it can be shown that cash is drawn, but cash has not been moved. So D, a report should be made by the accounting officer to the accountant general stating the circumstances of the loss. So if there's a loss of payment voucher, this is what's supposed to be done. The receipt voucher, we have finished with payment voucher, we move to receipt voucher. A receipt voucher is the documentary evidence that some stated thereon has been received, that some has been received. So any receipt into government purse must be supported with Treasury Form 15. Pay-in form is called pay-in form with attached Treasury Receipt Book 6 before it is regarded as an authentic received voucher. So adjustment voucher, we are done with payment voucher. We move to adjustment voucher. Adjustment voucher is a documentary evidence of formal entries which enable transfer to be made from one account to the other without actual receipt or payment of cash. So adjustment voucher is used to move payment from one account to the other without involvement of any cash. So adjustment voucher is used in any of the following circumstances. So these are circumstances that you can issue or raise adjustment voucher. Adjustment voucher. A is payment for interministerial services. If you have to pay into different ministry service, then you can use adjustment voucher to make the payment. Correction of accounting errors arising from misclassification. You can use it for correction of errors. You can use it to ultimate allocation of unallocated inventories. You can use it to allocate unallocated inventories. You can also use it to carry out adjustment or transfer between accounts. Can use to carry out transfer in between accounts. So this is what adjustment vouchers can do. So the following particulars are required on an adjustment voucher. These are the particulars for adjustment voucher, just as a payment voucher. So reason for the transfer or adjustment will be stated with full reference to the original debit or credit being adjusted. So you have to refer to the original document that you are making adjustment on. Then B, voucher number for the adjustment. Then month of account. Which of the months of account are you adjusting? Then D, particulars of treasury or audit query, where the adjustment is as a result of such an investigation. So you have to trace it to the audit query that ordered you to make the adjustments. Please take note of that. Then journal vouchers. Journal entries are used for effecting transfer from one account to the other without involving physical movement of cash. There are two main types of journal vouchers. These are supplementary journal voucher, SJV. Then two is principal journal voucher, PJV. So supplementary journal voucher. This is used under the following circumstance, where transfer and adjustment are to be made before the below the line statement is extracted. So we'll make the adjustments before below the line is being extracted. Maybe you use it to maybe remove the first line charge before you now remove the major charges. So two, where difference are discovered between the transcripts posting of a ministry or department and bank statement received. Then it can also be used where there is need to classify account into suitable heads and subheads before the trial balance is prepared. That is when you use supplementary journal voucher. Please take note of that. So you should know the difference between adjustment voucher and journal voucher. Make a clear difference between adjustment voucher and journal voucher. We move to payroll accounting in the public sector. So the standard payroll system to be applied in all offices unless otherwise provided under Financial Regulation 15-1518 shall be such as to ensure that maintenance of the following record will be made in a single operation. A, personnel emolument record, payroll in duplicate together with a bank paying in advice slip, pay statement to be issued to the individual officers. So when we were doing this, there were no fintech or digital technology in place. Now with the digital technology where salary bank pay the salary direct or bank upload the salary direct, I don't think all these things will be necessary. But if the syllabus say we should teach it, we should still continue to teach them. So most of these things might not be relevant now. So the above position shall be applied irrespective of whether the system is computerized or not. So the officer controlling expenditure shall ensure that the standard personnel emolument record shall show the following. Personnel emolument record shall show standard rate of pay of the officer. You must know the salary, you must know the incremental rate, you must know the standard allowance, you must know the salary and other advances issued, you must know the tax, that is the payee tax, you must know the gross emolument, you must know standard deduction from emolument and net emolument payable. At least these are basic things that shows in an officer's pay slip. If you are issued a pay slip, you will see all these things in your pay slip. So they are all there. So custody of personnel emolument. Who keep the custody? Where the accounting system is manual, the head finance and accounts shall ensure that the personnel emolument record cards are kept under strict security arrangements. The PEC shall always be kept under lock and key in a fire-resistant cabinet, safe and strong room when not in use. It's mandatory for every officer to complete the personnel emolument record from annually, or must be certified by the head of department or other designated officer. The completed personnel emolument form shall be the basis for opening the group registers, which must be audited before the inclusion of any officer in the payroll. So this is how these records are kept. So in the custody of the head of finance and account. Take note. So action by the salary section. What does the salary section do in the payroll? So they effect necessary entries in the personnel emolument record. So the salary section do the entries in the record of each employee in the payroll, example, basic salary for the month, deduction and net salary payable. Aggregate all entries made in A above and raise treasury form. When they enter, they will raise treasury form 209, advice of deduction from salary to take care of deductions, and TF, there's other changes, payments, vouchers for the payments, vouchers in favor of the relevant beneficiary. C, the treasury form 209 and TF1 raised shall be classified to the appropriate below the line classification code. A summary payment voucher treasury form shall be raised on pay point basis to capture the total basic salary and allowance due to arrive at the gross amount due to all officers in a pay point, the total deduction and the net amount payable. Process cash order form in order with the provision of the financial regulation. As I said, modern technology will not allow all this to happen, but then the syllabus says we should teach it. So this is what the salary section of the payroll do. This is what they do. So this is what the cash office do. When the salary people finish, they push it to the cash office. And this is the action of the cash office. The cash office will check the payroll summary voucher and other supporting documents against entries in the forwarding schedule from the internal audit unit to ensure that all relevant documents are complete. So the cash office will sort and allocate treasury payment voucher number to summary voucher and on payment voucher and treasury receipt voucher in respect of TF 209. C, stamp all summary voucher and on payment voucher with a paid stamp for the month of account. D, draw checks for the net amount payable in the summary payment voucher in favor of the bank through which payment is to be made. E, draw checks due to various agencies as reflected on the payment voucher. This is what the cash office will do from the entries forwarded by the salary section. So that's for preparation of vouchers. Assis, do you have any question on preparation of vouchers? Assis, are you there? Assis, if you are hearing me, do you have any question so far?
No, sir.
Okay, go ahead.
I said no, sir.
Okay, no.
Yes.
All right. Okay, stay on. Let's solve the question that I posted.
Come on, flow. Yes, sir.
So you can be reading the quiz 2. I'm reading the quiz 2 question. So we are looking at the solution to our question. So the A part say distinguish between federation accounts and consolidated revenue fund. CRF, assist, sure you can do that one. Can you do that?
Yes, sir.
Okay. Then B part say prepare federation accounts and consolidated revenue fund from the following information. You can read it on your platform. I posted it there. Import duties is 400,000. Export duties 300,000. Excise duties 200,000. So petroleum profit tax is 80 million. Companies income tax 71 million. Payee deduction from emolument of armed forces 400,000. Police personnel 30,000. Residents of Abuja 20 million, sorry. All these are a million. Dividend from federal government investments 120 million. Then outflows, all these things, all this one was listing are inflows. Then outflows are remuneration of statutory officers, 13 billion 800 million. Then recurrent expenditure is 1 billion 500 million. Then transfer to development fund is 2 billion 500 million. Then contingency fund is 20 million. Then note revenue allocation is federal is 52.68, state government is 26.72, local government is 20.6%. So suggested solution. So reduction account for the month ended 31st 1 20XX. So import duties. Import duties is how much? As is. As this is gone. 400. Export duties. is 300 million. Excise duties is 200. Petroleum profit tax is 80 billion. Company income tax, CIT, 71 million. So you have 151, 900, 151, 900. So you have distribution,
Sir,
yeah,
please, can you please explain for me from the beginning because my battery went off. I just got another system.
I should explain for you. Huh?
Yes, sir.
Okay. Oh. Have you read that question that I posted there? Huh? Assis,
I said yes, sir.
you have read the question. It's the question that we are solving. You will take my time. Oh.
Sorry. Sir, you don't need to clean it, safe.
So are you following me now? Assis, are you there? Not that when I start now, you say,
Yes, sir. Yes, sir.
Don't say I should start again. So, so federation accounts. I don't know why this thing is not tick again. So, federation account for the month ended 31st 1/20XX. So we are starting all over again. Oh. Import duty is how much? We are considering inflows. Import duty is how much? $400. You are not looking at your book. Is it correct? That's import duties. Export duties. Are you there?
Yes, sir. Export duty, 300.
300. Then excise duty.
200.
How much? Excise duty is 200, Abi?
Yes, sir.
You know that it's a million of, it's not 200,000. Then PPT, petroleum profit. Yes, petroleum profit tax, 80 billion. Company income tax, CIT,
71,000.
71 billion.
71 billion.
So total inflows is what? 151 billion 900. Abi? No, press your calculator. So that is the inflow. That's the inflow. Did you get it? Did you get that? Assis, do you get that?
Get it, sir.
Eh?
I did not get it, sir.
If you add all
Okay.
of them, what does it give you?
Okay. Now I understand it.
You add all of them. So that is the total inflow, 151,900. So let's erase so that we do something else. So we have gotten 159,900,000,000. So we are to distribute like this, distribution. That is how to distribute it. Federal government. Federal government is, how much percentage did I say is federal government?
52.68.
Okay. Of 151,900. That will give you how much? So provide me the answer. State government. State government. State government is
6.72.
72% of 151,900. 000. Then local government. Equals to how much? Are you there?
Yes, sir.
20.6, Abi?
Yes, sir.
Percent of 151,900,000. So the first one is how much?
800.21.
800 or 80. 80,020. Oh, 920.
Yes.
Abi?
Yes, sir.
Second one,
Sir, there is point there.
there's no point. It's comma 80, 020, 920, So the second one is 40, 587, 680. Am I correct?
Yes, sir.
So what is the third one? Give me the answer. Our time has passed to do fast so that we move. The third one is what? Press your calculator.
Yes, I'm pressing it. 31,291,40.
31,291,400. Is that what you have?
No,
What do you have?
31,291,40.
What you are doing is you are calculating 20%. We'll just do 20.6 all over 100. 20.6 all over 100 times 151, 900, 000. What do you have?
Okay.
What do you have?
31,291,400.
That's what you would do. So when you add all this one now, when you add all this answer, what do you have? Add all the answer we have here. What do you have?
Yes. That first one, sir, is it 920 or 720?
Which one?
The first answer.
The first one is 80,020,920. Then the second one is 45,876,80. And the third one is 31,291,400. What is your total?
$151,900.
So does it give you the total revenue that you have before?
Yes, sir.
So that is how it is shared. We are through with federation account. Why did you pick import duty, export duty, excise duty, PPT, and company income tax? Why do you pick that?
Because it's the federation fund. Because it's the income from import duties, export duties, and the excise duties.
Why do you pick it? What we solve now is federation account. So why do you pick that?
Yes, it's paid into the federation account.
Okay, so those are federation account items. You get?
Yes, sir.
So that is how examiner will mix it up. It's you that will separate. So in that my slide, you will see items that are for federation accounts and items that are for federal government consolidated revenue fund. So if you know which item goes, your duty there is to separate the account and know which item is for federation account and which item is not for federation account. So we have done the federation account aspect. We now move to B, consolidated revenue fund. B is CRF, consolidated revenue fund. Say inflows, one, armed forces personnel, we have 400, Abi. Is that what you have?
Yes, sir. Yes,
okay.
Yes.
Police personnel,
30,000.
30, Abi.
Yes, 30,000.
We have 430. Dividend from federal government. Dividend is how much?
120,000.
120. Government investments. Is how much?
Government investments.
Dividend, you say, is how much?
Dividend is 120.
And government investment, how much?
It's dividend from government investment, 120.
Okay, dividend from government investment. Okay. 120, okay. Share from federation accounts. Okay.
Share from federation accounts.
What do you have in that first calculation we did?
Okay, 151,900.
No, share of federal government. Share for federal government was how much? You have forgotten. 80 02 09 20. Was it not? Eh?
Yes, sir.
80 02 09 20. Okay. So if we less outflows, I have to erase this thing. So if you add everything now, how much do you have? Balance carried forward. Balance carried forward. Are you calculating?
Yes, sir.
How much? $430 plus 120 plus 80 02 09 20. What do you have now? You are not passing. 80 570
570 920.
920. Okay. Write down that figure somewhere because I'm going to clean this up. So that is the total inflows from the consolidated revenue fund that we have. So write down the figure somewhere. Okay, let's just say carry it forward. Carry it forward. 80, 570, not writing there. $80, 570, 920. So you now less outflows. What are the outflows? How do you know the outflows? How do you know the outflows? Outflows are the expenditure. Are you hearing me?
Yes, sir.
Outflows are the expenses. Inflows are the income. What goes into other accounts are revenue that we learned today. Outflows are the expenditure. So one of the outflows is remuneration. Remuneration of statutory officers. Remuneration of statutory officers. What do we have there?
13,800.
13,800. Okay. The current expenditure.
Recurrent expenditure.
Yes.
1,500.
1,500. That's 1 billion. 500. 1,500,000. Transfer to development fund. Transfer to development fund.
Two five.
25. Transfer to contingency fund.
20,000.
20.
So these residents of Abuja, we are not going to include it. Okay, they are in the states. Sorry.
Thank you. Thank God that you know what you know. Because I asked, I asked you the question before. Say, why did you pick those ones? And you answer, so you should know what you are picking. So, what is your answer? You deduct all this from this. What will you get?
65, 750, 920.
65. Is that what you have? 13,800.
Okay. 13. Let me do
18,800 plus 1,500 plus 2,500 plus 20. That gives you how much?
plus 2. $17,820.
Hmm?
17,820.
Then you deduct it from 85,7920.
And that was when I got the answer.
Is that?
I said that first answer that I gave you is when I
Hmm.
deducted it from 8570. Let me do
Is
it.
that what you have?
Yes. I want to do it again.
You didn't get the correct answer now. Just do 85,7920 minus 13,800 minus 1,500 minus 2,500 minus 20,000.
$62,750. 67,50920.
62,750, Abi?
Yes. 920.
920. So that is your answer. That you are carried forward. So that is what the examiner wants you to do. That is the balance as at the end of the account that you prepare in the Consolidated Revenue Fund of the federal government. That will be the balance. You got 80,579,20. That was your inflow. Then these are your expenses. 13,900. But it would have been better you add up all the expenses, then you deduct it from the 80,579,20. But you still get 62,970,920. So do you get how to calculate this thing now? Do you understand it?
Yes, sir.
If an examiner give you another question and twist it, will you be able to pick the figures? So the important thing here is to know which one is the Consolidated Revenue Fund items and which one are Federation account items.
Yes.
So you can see that there are some items that were not picked, Abi?
Yes.
So and you know why they were not picked. You know why, Abi?
Yes, sir.
So what do you think that was the reason why they were not picked?
Because they are not under those accounts.
Okay, thank you for that. At least you understand it. So at least I've been able to take you through how to solve a question related with Federation accounts and Consolidated Revenue Fund. It's a major item to be tested by your examiner. So you look at your past questions and make sure you treat questions on this item very, very importantly. Very, very importantly. Eh? Are you hearing me?
Yes, sir.
We have treated your past question. So we move to question 1. Say one of the following is responsible to take custody of personnel emolument record. Cards, PRC, PERC, where the accounting system is manual. So who's supposed to do that?
C.
See, are you sure? We have done it in this place now.
Yes.
Custody of personnel emolument record. Who do we say should take custody of it?
D.
Okay. So you pay me for all this and you are bringing it back. Okay. All right. So we have come to the end of this class today. We have stretched our time 11. No problem. At least we have been able to do a major work here. So did you enjoy the class?
Yes, sir.
Very well, Abi.
Yes, I enjoyed today's one.
So you have not been enjoying all this one?
This public sector accounting class is always boring.
Yeah. Okay, it's like you like calculation, Abi.
Yes, I prefer calculation.
But calculation is not that much in. You do when you get to the skill level of ICAN, you do public sector skill. That is where calculation are much.
Okay.
So you don't have much calculation here, but there are some. So the little calculation you will do, you have to learn it very well. Because the examiner would like to test you. That is the thing. So take care very well and have a nice weekend.
I need to, sir.
Bye-bye.
Yes, sir.
Yeah.